Good morning, wealth creation investing traders and investors. My name is Matthew Buckley, call sign Wiz, and I'm the Chief Investment Strategist here at WCI. Interesting week we've had, folks. Opened up the week on a Sunday with mixed news out of China, our banker, with good retail sales and industrial production, and it was followed up by Sunday Night Football with their trade balance numbers that came out very poor. 32 billion last time around. The 500-pound heads were expecting about 27 billion, and we saw 19.6. So conflicting news out of our banker in China. We're still very bullish here at WCI. Long term on China, we have a long-term bullish diagonal trade and options position on the FXI that's working out really well. Monday, Tuesday, kind of quiet in the market, and then obviously Wednesday was a complete game changer for U.S. equities and treasuries as well, and we'll get into that in a couple minutes here. Thursday, market meandered around because of what happened on Wednesday. Unemployment claims came in a little less than expected. We had some PPI and core PPI looking at inflation. So as per the Fed's announcement on Wednesday, it looks like inflation really is in check for now, folks. But like death and taxes, inflation's going to happen. It's not a matter of if, but when. And then on today's flight schedule, we're looking at some core CPI numbers and CPI numbers. And again, if you don't know what they are, it's pretty cool on Forex Factory. You can go down here and say why traders care. This is the caveman section for traders like me. Consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead to the central bank to raise interest rates out of respect for their inflation containment mandate. And I almost said that with a straight face. Obviously, folks, and let's get back to what's happened on Wednesday, and we'll figure out what's going on here. Obviously, unless you were in a cave on Wednesday, the Fed came out and in their statement said, hey, we're going to tie our monetary policy, instead of to a time period, which I fully applaud, to metrics. Now, applying strategy to a time period is bass backwards, in my opinion. That's like the president telling the Taliban that, hey, guys, just a heads up, we're leaving Afghanistan in 2014. It's a ridiculous strategy, in my opinion. You say we're leaving Afghanistan when the Afghani police and military can provide for their own security. Well, when's that going to be, Mr. President? I don't know. I'm going to let my generals tell me. So that's how strategy should work. So finally, at least to the Fed's credit, they've shifted their sails and said, hey, our monetary policy is going to be based to the unemployment rate. We're looking for a target of about 6.5%, and then we'll start look at not easing monetary policy, if that's a word. But folks, here's the troubling thing out of what the Fed's doing. Right now, the Fed's balance sheet is $2.8 trillion. Yeah, that's with a T. First of all, our nation's in debt to the tune of $16 trillion, and the Fed, by the time they're done all this hovering over the market and dumping liquidity into the market, is going to have a balance sheet of about $4 trillion. For those of you who, like me, who slept through your economics classes in college, a balance sheet implies balance. So one day, Virginia, the Fed, Mr. Ben, or his replacement, is going to have to unwind the balance sheet and get rid of all these mortgage-backed securities. And they actually skipped. Here's what's kind of crazy, folks, is they ran out of their stockpile of short-term treasuries. They've been selling short-term, buying long-term treasuries to keep rates low, right? They ran out of them. So now they're going to fund their purchases by adding reserves to the banks, right? Which basically means that the Fed is going to be printing money to buy more bonds. Folks, it's not good. And let's take a look at a chart of the history of the world recently. Well, let's take a look at the chart of this week. There's always been, it seems like this quantitative easing has been going on for always, but there's always been this run-up to the Fed announcement. For long-term viewers and traders of mine at Wealth Creation Investing or at Top Gun Options, you know that I call Uncle Ben the bartender, right? He's serving liquidity to a bunch of drunks in the market. And this was them waiting in line at the door. And then he came out and kind of announced what was going on, and that's exactly what the market did, was sell off. Why? Folks, at the end of the day, the Fed having to get involved in monetary policy and trying to prop up this market is a bad thing. That's what happens is once the sugar high wears off from the market and they go, whoa, 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 why are we getting all this liquidity? Oh, it's because the Fed thinks the economy sucks and is going to implode. And in the end, folks, that's not a good thing, right? So again, a brief history of the world. There's our financial tsunami, and the world was supposed to end, and in my opinion, should have. Right here is where George Bush and Hank Paulson did the worst thing they ever could have done, or anybody could have done, and that was get involved from the government point of view in capitalism. Should have never happened. Bear Stearns, Lehman, AIG, the Thundering Herd, all of that should have been allowed to fail. Now, the only people that said that this would have been horrible and really like destroyed our country are the bankers, right? Guess what? The sun would have rose, and we would still be breathing air. And guess what? From the ashes would have risen a phoenix and a much stronger system, but it didn't. So there's QE1, and then we take the training wheels away, like my 4-year-old Keely Grace, who I'm trying to teach to ride a bike, went down the street and right into our neighbor's mailbox. Well, that can't happen. Markets can't go down, right? So we better print more money into a QE2. Okay, honey, well, I'm going to keep the training wheels off. She went further down the street and then ran into our neighbor's lawn. And again, whoa, 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 we can't have markets go down. That's not good. Markets should only go up. Operation Twist, buying $40 billion a month of mortgage-backed securities. And then quantitative easing infinity, and that kind of tapered off, and here we are with whatever the hell you can call what we're doing right now. $85 billion on the balance sheet. Just absolutely unbelievable. So again, I'm not a rocket surgeon, but very big line, less bigger line, small line, smaller line. The effects of quantitative easing have diminished with each round, and the market is selling off. Folks, we are at we're at tsunami highs here. We're getting very close to SPX, 1500. And if we get a fiscal cliff deal, which is a whole nother discussion, we might see a rip your face rally off up to about 1500 on the SPX. I have positions on in our model portfolios that are hedged both ways. That are hedged to the clown car not being able to get anything done and us kind of going off the cliff, to us getting something done and a nice rally in the market in January, February. So I have positions on that's going to take advantage of both those. But folks, this is just not a nice picture. And in case you really don't follow, I know you don't follow Fed policy, you'd rather get your teeth drilled, but here's the main reason. When people ask Uncle Ben, why all this quantitative easing, one of his answers should make you scratch your head and start to drool. This is called the wealth effect. Good, and he of course uses Princeton words. I can't. I went to school at Jacksonville University, so I was born and raised in New Jersey, where Princeton is, but I can't talk like I'm from Princeton. So here's my take on it. You feel wealthier, don't you? That's what the Fed chairman's saying. You feel wealthier. Look, equities have gone up. In the past 5 years, I've done a great job of propping this market up, and everybody feels richer. Do you? I don't. I can tell you, all my friends, family, nobody feels richer. You know who feels richer? Banks. Because as he takes all these mortgage-backed securities off of their balance sheets, as he's buying these treasuries, as he's adding liquidity to the market, guess who gets fat balance sheets? Citibank, Wells Fargo. All these people who are annoying and calling me on the phone saying, hey, you were late with your payment. I'm like, seriously, dude? You're welcome for your bailout, first of all, and you're welcome for all the money that the Fed's printing. In case you didn't know, and I have a really old copy of the Constitution because it doesn't talk about health care and a bunch of other stuff, but apparently the government doesn't exist without taxpayers, right? So the government doesn't have money. It just redistributes wealth. It's a referee of money. So Bernanke thinking that hey, I can print $4 trillion of money. Whose money is that, folks? Seriously, think about that. So he's busy getting bankers rich, and you and I on Main Street are getting a lot poorer, aren't we? And not to sound like Debbie Downer, but I am telling you that this is not good for the markets, folks. The Fed policy that came out on Wednesday isn't good. But Like I tell my Top Gun options traders, it's not good for the markets, but I'll be damn sure if I'm not going to trade the hell out of it and potentially profit. Let me show you this week alone in one of our primary trade alert model portfolios, and we're only using. See, there's $100,000 right there. I just opened this paper trading account about a month ago because I'm splitting up the primary live trade brief and primary trade alert service, so that's why you're only seeing a year-to-date game, $1,900. That's, I think, the month-to-date, because I opened this account a couple weeks ago or whenever it was. But here's what I'm getting at: out of $100,000, we're only using about 36 grand in haircut right now. Okay, and in the past week, December 10th through the 14th today, we're up nearly 5 grand. So what's that? 10, 12, 13% return in a week, folks. So, like I said, and like I've been telling Top Gun options traders, you can weep for the U.S. and you can weep for what's going on, but we did it to ourselves, and don't feel bad about making money on just kind of the poor decisions of others. That's what we're here at Wealth Creation Investing to do. That's what Top Gun Options does. Okay, so while someone who served this nation for 15 years, just I feel horrible, but guess what? I feel less horrible when I make money profiting off of these really poor decisions that the Fed's making, that our government's making, and just an interesting week, folks. A game-changing week from Fed policy, and I didn't even spend a lot of time in our Friday market wrap-up here talking about the fiscal cliff. So join us Monday. I'm going to get my mind right this weekend. Going to spend some time down here in South Florida on the beach with my Ultra book, with my Wall Street Journal, with my Barron's, with my BlackBerry, talking to folks and getting my mind right and figuring out what the hell's really going to happen in this country so we can potentially profit. Okay, if you're interested in we just launched a weekly option service here at Top Gun Options that employs weekly options. So we'll put on a trade either today, Friday, or Monday, and then we'll manage that trade for maximum profitability or exit for minimum loss by expiration each Friday. So great new service here at Top Gun Options. Go to topgunoptions.com and you can hover over services and click TA/LTB combo. What's that mean? Trade alert and live trade brief combo. So TA-LTB is the page you want to go to. And you can take a 14-day test flight of primary. We're skill-based here at Top Gun Options, meaning if you kind of know a little bit about options, primary's for you. If you think you're a Jedi Master or you kind of know what you're doing with options, intermediate and advanced is for you. But this is obviously where most of our traders start out when they first get on board Top Gun Options, and that's a nice 14-day test flight into primary, intermediate, and advanced. It's about 10 hours of live trading in 2 weeks and about 5, 6, maybe 7 standalone trade alerts, trades that aren't covered in the live trade brief services. So join hundreds upon hundreds of other traders that are here at Top Gun Options who are kind of kicking the butt out of the market. And with this type of performance, I need to update this. This was last week. I'll update this today, but we're still up over 300% year to date and on about $50,000-$60,000 of haircut. Okay, and I think we're still up over about $160,000 in profits on about 50 grand in haircut. Okay, so that's discipline, that's risk management, and that's superior execution. That's Top Gun Options. So happy hunting. Make sure you hedge, and I'll see you for Monday's market outlook next week. Have a great weekend, and we'll talk to you then. See ya.